Welcome back to the Skift Daily Briefing. It's Wednesday, June 24th. I'm Sarah Dandashy, and today, airfares are up 20%, and airlines are betting that they stay that way even if fuel costs drop. Carnival just posted record revenue but still trimmed its outlook, and Airbnb has been trying to become more than a rental platform for pretty much a decade. Here's what that actually looks like. Let's get into it. So, first up, good news on fuel prices, but don't expect cheaper flights to follow. Jet fuel has dropped from a peak of nearly $5 a gallon in April to around $2.79 today. But airline executives are being very clear. Fares are staying up. Delta's CEO said fuel recapture is a priority. The airline wants to hold onto pricing power even as costs ease. United Scott Kirby estimated that if things normalize back to pre-war levels, airlines would probably keep about 20% of the fare increases permanently. So the reason that they can do this, less competition. Spirit is gone, ultra-low-cost carriers have pulled capacity, aircraft delivery delays have kept overall supply tight. So with fewer seats in the market and strong demand from higher-income travelers, airlines have real pricing power right now, and they know it. So the takeaway for travelers, the fare relief many were hoping for with the Iran war winding down may not materialize the way that they had expected. The structural shifts in the industry mean higher prices could really be the new normal for a while. Next up, Carnival just reported record second quarter revenue of $6.66 billion. Adjusted net income jumped more than 20%, even with fuel costs up nearly 30%. Customer deposits hit an all-time high of $9 billion. By almost any measure, a very strong quarter. But the company still trimmed its full-year outlook, cutting its net yield growth forecast by a full percentage point. The reason? The Middle East war lasted longer than anyone expected, hitting European bookings, especially Mediterranean itineraries, harder than anticipated. Now, the good news is CEO Josh Weinstein said that booking trends turned a corner in June after the Iran-U.S. interim deal was announced. European bookings for next year are already up mid-teen percentages, and Carnival is 93% booked for 2026. But the honest caveat from Weinstein, he doesn't expect smooth sailing through the end of the year. The geopolitical situation is just normalizing, but gradually, there will be bumps. And finally, Airbnb has been trying to become a travel super app for over 10 years. Skift published a full timeline this week, and it's a revealing look at just how many times the company has started and stopped. Trips and Experiences launched in 2016, paused in 2020, relaunched in 2022, paused again in 2023, relaunched in 2025. Hotels Pilot started in late 2025. Car rentals added in May of 2026. FinTech launched this month. Airport pickups rolled out in 125 cities. Grocery delivery tested in 3 U.S. markets. Brian Chesky has said he expects to launch 2 or 3 things annually that could each eventually hit $1 billion in annual revenue. That's an ambitious target for a company that has repeatedly tried and pulled back from the same expansions. What's different this time may be focus and scale. Airbnb now has dedicated hotel leadership, a Booking.com veteran running hotel partnerships, and hundreds of content creators signed up to host experiences. The pieces are more coordinated than any previous attempt. So in a nutshell, Airbnb keeps trying to be more than a place to find a room. The question isn't whether they want to, it's whether they can build the habits to make travelers think of them first for everything else too. Well, that's it for your Skift Daily Briefing. For more industry news, head to skift.com. And as always, subscribe at skift.com/daily. Thanks so much for listening.